Hello, this is your daily dose of financial market trends. Meta plunged more than 4% yesterday while chip stocks took a beating across the board. With Nvidia earnings just a week away, is this a buying opportunity or a warning sign? Heading into today's session, yesterday's close showed a red finish across the board. The S&P 500 ended at 7,691, down 0.7%. The Nasdaq took the hardest hit, falling 1.3% to close at 26,289. The Dow held up best, dipping just 0.2% to 53,343. The VIX ticked slightly lower to 15.78, while the 10-year Treasury yield dropped to 4.71%. Let's start with Meta, which is generating serious attention today after yesterday's 4.5% drop. The social media giant saw elevated trading volume and is showing up across multiple corners of the market right now. What's interesting is the convergence of factors. Geopolitical headwinds affecting tech broadly, the sharp sell-off itself creating technical interest, and significant social chatter as investors debate whether this is panic selling or justified repricing. With Meta down this sharply, the question becomes whether fundamentals have actually changed, or if this is simply risk-off rotation out of mega-cap tech. Broadcom is another chip name catching real attention, down more than 3% yesterday. The semiconductor sector is feeling pressure from concerns about government borrowing costs, potentially impacting infrastructure spending and corporate capital expenditure. Broadcom reports earnings in early September, so investors are positioning ahead of that print. The chip space has been volatile lately, and Broadcom's diversified exposure to both AI infrastructure and traditional enterprise hardware makes it a bellwether worth watching closely. Nvidia fell over 2% yesterday and has earnings coming August 26th, just 1 week out. The AI chip leader is dealing with the same macro pressures hitting Broadcom, but the stakes are higher given how much market sentiment hinges on Nvidia's guidance. Every Nvidia earnings call has become an inflection point for the entire tech sector, and this one comes at a moment when chip stocks are already under pressure. Expect volatility to build as we approach next week's report. On a completely different note, Alibaba gained nearly 3% yesterday after news broke that the company is cashing out of gaming investments to double down on artificial intelligence. The Chinese e-commerce giant reports earnings tomorrow, August 20th, and this strategic pivot signals management's belief that AI infrastructure offers better returns than entertainment assets. It's a significant reallocation of capital, and tomorrow's call should give us more color on how aggressively Alibaba plans to compete in the AI arms race against domestic and international rivals. 3 macro scenarios are shaping market dynamics right now. First, Middle East energy supply tensions. Iran is reportedly considering strikes on European targets if U.S. military conflict restarts, and UK inflation just accelerated to 2.9%, partly because of Middle East energy shocks. The bull case, at 35% probability, assumes diplomatic channels prevail and energy routes stay secure. If that happens, energy prices stabilize or fall, easing European inflation and letting central banks stay accommodative, which would support risk assets. The bear case, at 25%, envisions U.S. military action triggering Iranian retaliation that disrupts European energy infrastructure or Strait of Hormuz shipping. That would spike oil prices, force central banks to hold rates higher longer, and punish growth equities. Second, UK inflation trajectory and Bank of England policy. UK inflation hit 2.9% in July, keeping the Bank of England on track to hold rates steady in September. The bull case at 40% sees energy prices stabilizing and inflation trending back toward 2% in coming months, giving the BOE room to cut rates in Q4. That would support UK equities and particularly benefit rate-sensitive sectors like financials and real estate. The bear case, at 45% probability, assumes energy shocks persist and inflation stays elevated above 2.5% through year-end. The BOE would then maintain restrictive policy longer, dampening growth and hitting consumer discretionary and growth stocks hard. Third, US-Canada trade relations. Trump announced a deal with Canada and paused tariffs, though details remain uncertain. The bull case at 55% assumes a comprehensive agreement gets formalized, stabilizing North American supply chains and reducing input cost uncertainty for manufacturers. That would benefit both Canadian and US equities. The bear case at 30% sees negotiations breaking down after the pause period, leading to reimposed tariffs, supply chain disruptions, and retaliatory Canadian measures that pressure margins and stoke inflation. The 30-year fixed mortgage rate sits at 6.67%, and housing inventory has climbed to 9.3 months of supply, well above the balanced market threshold. Home price growth has slowed to just 1.1% year over year. If the Fed keeps rates elevated, expect the lock-in effect to intensify as homeowners refuse to trade their low-rate mortgages for current rates. Two massive earnings reports this week: Alibaba tomorrow and Nvidia on August 26th. Both have the potential to move markets significantly, so keep those dates on your radar. 5 things worth watching right now. First, tech volatility is rising ahead of Nvidia earnings next week, and yesterday's chip sell-off may create entry points if you've been waiting on the sidelines. Second, Meta's sharp drop on elevated volume deserves attention. Watch whether it finds support here or continues lower as a canary for mega-cap tech. Third, geopolitical risk is back in focus with Middle East energy tensions and UK inflation, both tied to the same underlying concern about supply disruptions. Fourth, the housing market lock-in effect is intensifying with mortgage rates stuck above 6.5%, which has implications for home builders, consumer spending, and the broader economy. And fifth, Alibaba's strategic pivot out of gaming and into AI reflects broader capital reallocation happening across global tech. Watch tomorrow's earnings for clues on how China's tech giants plan to compete in infrastructure build-out. As always, this is educational content, not financial advice. So do your own research and consider your personal risk tolerance before making any investment decisions. That's your morning market digest for Wednesday, August 19th. We'll be back tomorrow with another update. See you then.